What's up, guys? John here. A large and life-threatening catastrophic tornado is ripping through Nebraska, destroying homes, evacuating tens of thousands of people.
Dozens of tornadoes touched down in at least 3 states, including Texas, Oklahoma, and Nebraska.
Dozens of twisters reported in the Omaha, Nebraska area, and millions of Americans are under another severe weather threat today from Texas to the Great Lakes.
This is going into other states. They're warning Texas is going to be next. Michigan, Iowa, Kansas, they're having evacuation orders. And you look at this situation, I mean, look, 3.4 million views on this. 3.4 million views, 250,000 views on this. I mean, 163,000, 1.1 million. It's pretty shocking, right? But look at the amount of damage that's happening right now to these structures, all these homes that are getting destroyed. And this matters in a very big way, even if you don't live here, because what's going to happen is insurance companies are about to wreck America, because insurance companies, they're reporting massive losses. And State Farm and Allstate and Liberty Mutual and all these different companies are issuing losses in the tens of billions of dollars. And it's not just this scenario. Remember the flooding in San Diego? The disaster was the biggest flood in 100 plus years. The mudslides in LA, the flooding in Maine. Remember the Fort Myers disaster, the Fort Lauderdale flood? What about Hurricane Lee and Hurricane Hillary? This is all in the last 12, 18 months. This is all new. All these disasters are brand new. It's not like I'm bringing something up from years ago. But what this is going to mean is rates are about to go parabolic in America. Parabolic. And a lot of areas are going to get almost unlivable. The CEO of Redfin warned this. Glenn Kelman said Florida, it's going to be almost impossible for most people to live in Florida because of insurance, owning a home there. Now look at this. I'm going to break this down for you. In Time Magazine, tornadoes strike Nebraska and Iowa, destroying homes. I'm going to break this down for you, give you the facts, and show you exactly what is coming. Because a lot of people are seeing auto insurance rates and home insurance rates. They say, John, look, it's not going higher than this. CNBC put out an article yesterday telling us exactly where rates are going and exactly how much money this is going to cost the average American. Please hit the like button. When you hit the like button, YouTube will share the content, educate more people what's going on in America's economy. And if you'd like to fix your credit to position yourself, what I believe is going to be a very different America. We love to help fix your credit to position you for funding. Think about maybe investing in distressed real estate, maybe getting a business loan, or any type of investment. You're going to want the best credit to get the best possible funding based on your credit score. Because lenders look at your credit score to gauge risk. The lower your credit, the more risk they associate with doing business with you. So if you have any issue at all, we'd love to help you at GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, or closures, bankruptcies, repossessions, or any negative item at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for Monday. Take a look at this. So, I mean, CNN reported yesterday that this situation is 18 million people across Nebraska, Iowa, Kansas, Missouri, Oklahoma, and Texas are under flood watch through Sunday. And they're warning that the locations inside of Texas are going to be, I mean, look at this, for example, Dallas, Austin, Oklahoma City, Tulsa, Kansas City, and Wichita, right? So it's a big problem. Now let's look at what State Farm and what these insurance companies are now reporting on. State Farm reports a monster loss for last year. And their losses, they're saying the auto insurance sector, they reported an underwriting loss of $9.7 billion, almost $10 billion in just auto insurance. With homeowners, and that's very hard to believe considering where auto insurance rates are right now. It's absolutely crazy. If you live in Philadelphia, it's almost $5,000 a year for basic auto insurance premium. I'm going to show you that in a second. 9.7 billion. Homeowners, commercial, multiple, Pearl, with other experiencing 4.7 billion underwriting loss. The health insurance sector reporting a loss of 106 million, right? And so Allstate, Liberty Mutual top $1 billion in catastrophic losses just in Q3 last year. Auto insurance rates up 26%. Now in Philly, it's $4,753 for annual car premium. $4,753 a month, meaning almost $400 a month. $396 a month is just the auto insurance. The average car payment on a used car in America is over $500. Average insurance or average payment on a new car, you're looking at $723 a month, almost $750 a month, right? So for context, during the great financial crisis in 2007, right before everything hit the fan, at a point where, bartenders owned 5 homes, a hairdresser, had 5 houses, everybody owned tons of real estate, everyone was a millionaire. and they thought that the party was never going to end. The insurance or the interest rate at that time was not even 8%. Not even 8% for interest rates for auto insurance. Car payments were car was $8,100. $8,100. The car payment on a monthly basis, rounding up, $8,200 for a car. The interest rate at 8%, so rounding everything up, it was $135 a month was what a car payment was back then. Now just the average premium in Philadelphia is 3 times what the car payment was back then, yet wages have not moved. If you look at what this is going to mean, look at the average transaction price for new vehicles, $46,000 for a used car in 2022. 10 years ago it was $30,000. So basically an increase of over 50%. Over 50%. The average car insurance annual premium was $815 in 2012. In 2005, it was $870 for the year, right? So it was $72 a month is what people were paying for auto insurance. Now, what CNBC reported, they said that this is going to cost it's going to cost people $500,000 in a lifetime because of these disasters, these problems that you're seeing, now all the time. They're saying it's going to cost $500,000 for people that are born in 2024, right? $500,000. But what they're really saying here, when you scroll down, is they have a word for it now. It's called climate inflation. And they're saying that food inflation alone could rise by 3 percentage points per year. So how are we going to get to a 2% inflation rate? Like Jerome Powell saying, how's inflation going to be transitory? Like Janet Yellen saying, it's not. Inflation is going to get a lot worse. And they say that it's going to lead to crop failures, which could cause food prices to spike. Well, if you want healthy food, I promise you, it's not going to get cheaper in the future. The junk food, if you want to go to McDonald's and you want to eat a lot of that stuff, it's going to be expensive too. It's not going to be cheap. But people are going to be forced to eat a lot of things that they probably prefer not to, just because the prices are going to continue to skyrocket, right? And so the sad reality, in 2021 and 2022, a lot of people thought, hey, we're going back to normal. Everything is going to be really good going forward. We're going back to 2018, 2019. And so what do people do? They looked at inflation. They said, you know what? Hey, I can borrow money at 2%, 3%, 4%. I'm going to buy a ton of real estate and I'm going to ride the inflation wave. Everything is going to be great. And a lot of people bought commercial real estate. But now a lot of people have to refinance that commercial real estate the next year or two. And they have to do so in an environment where interest rates doubled or tripled. Insurance is going through the roof and vacancies are at all-time highs. And so what's going to happen? Well, you're going to see a lot of this perceived liquidity get ripped out of these assets. That's what's going to happen. I read a book recently from the CEO of Carlyle. It says the book is called How to Invest. And it's essentially a collection of interviews that he has with all these different billionaires and all these different hedge fund managers. And in every single interview, he asks them, how are you investing based on how asset values are going to change due to climate? He was asking every single billionaire this same exact question, right? Glenn Kelman, CEO of Redfin, was warning people the same exact thing, right? So this is what's going to happen. They say here, insurance companies are raising their monthly premiums on homeowner policies and rolling back coverage in areas prone to certain disasters to adjust to climate. So this is Florida, Louisiana, California are facing severe challenges, and I expect these issues will spread to other states in the years ahead. So if you have cash, you're going to be able to buy incredible deals, I believe, in a lot of these coastal areas going forward. Because when you own a single family home, if you have a mortgage, you have a contract with that lender that you will have an insurance policy in place to protect their loan. And so if you have a property that you own outright with no mortgage, you can opt in to self-insure, meaning if something happens to that property, you'll come out of pocket, you'll deal with it yourself, but you won't pay a monthly premium. You won't have to pay any deductible or anything like that. And so you'll essentially own the property. But when you have a property and you are paying more and more and more every single year for it, how many people are going to be able to withstand that type of financial pressure? How many banks are going to want to lend to borrowers in those areas, knowing that insurance rates are going to rise every single year, and not by 2 or 3% like they did historically, but maybe by 20 or 30 or 40%? How can they forecast how long that borrower can make payments on that property if their wages are not increasing? And these banks are not betting on the borrower saying, you know what, their wages are going to increase 20% a year for the foreseeable future. They're looking at their current debt to income ratio, making a decision and judgment based on that information. And so what I think is going to happen is we're going to be walking into a scenario where it's going to become very, very challenging to get a loan here, but those that have cash going to be able to go in here and in these areas and many of these other areas they deem as high risk and buy these properties for cheap, real cheap. I think it's going to be a very, very big rug pull. Insurance companies basically own America, because if you have to have insurance to drive a vehicle, if you have to have insurance to buy a home, if you have a mortgage, the insurance companies determine the asset values, because people are buying properties based on their debt to income ratio. And so if they're, let's say, earning $10,000 a month, the lender's like, okay, look, we can lend you, you can afford up to $3,000 a month on this property, but insurance is $500, $700, $1,000, $1,500 a month. What would that mean? How much is left actually, for the principal, interest, insurance, and taxes, right? Not that much, right? So they're going to be able to afford a lot less. And given everything that I just mentioned, I think a lot of lenders are not going to, lend them 30% debt to income ratio. I think they're going to be pulling back entirely from these states in the coming couple of years. But I'm curious, what do you think about this entire situation? Do you think we're getting ready to walk into a massive insurance rug pull throughout America? Let's have a conversation about this. And if you'd like to fix your credit to position yourself for funding for your business, if you have a business, you want to scale it up as quickly as possible over the next couple of years. Really put yourself in a position where you can go out there and buy real hard assets, because I believe they're going to print a lot of money. I believe the dollar is likely going to lose purchasing power greatly over the coming couple of years. And I think wealth is going to consolidate to the 1% and to the top 5% of the next couple of years. So you want to do everything you can possibly do to put yourself in that position so you can pivot and move inside of a much more expensive world, a much more uncertain world. If you have any issues at all in your credit report, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, or closures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video, schedule a free call for Monday, and I'll catch you next video.